Welcome to the Hassle-Free Cash Flow Minute. This is professional investor and real estate developer David Campbell. Today's lesson, how and when to use return on investment. In our first lesson, we understood that return on investment is a way to understand how hard your money is working. What kind of yield is it producing? And that math problem is profit divided by capital invested. It's important to understand the math behind real estate investing because if you begin with the end in mind, you'll understand that you're looking for return on investment. That's why we started with ROI as the first lesson, because that is the great apples to apples comparison of what you're trying to say. I could invest in stocks, I could invest in bonds, I could invest in notes, I could invest in real estate, but when you at the end of the day want to understand risk-adjusted return on investment, that's what gives you the ability to compare them, one investment vehicle to the other. Annualized ROI is much more important than ROI because annualized ROI is a reflection of how hard your money is working over a given year. And it's important to solve for annualized ROI because it's apples to apples. How hard is your money working on a yearly basis? That's how interest rates are reflected and most investment opportunities are reflected. Annualized return on investment. Let's do a case study. Assuming that you had a 25% return on investment and the investment lasted only 6 months, that's a much better deal than if you got a 25% ROI over 12 months. So let's annualize a 25% gross return. You take 6 months divided by 12 months per year and you get 0.5 years. Now let's take 25% ROI divided by the number of years, 0.5, and the result is 50% ROI per year. And if you had days, you can convert it to years in the same way. Number of days divided by 365, and that gets you the decimal point of years to divide the return of investment by. How to manipulate the algebra problem. The obvious one is the return on investment equals profit divided by capital invested. We talked about those. You can also do profit equals ROI times capital invested, and you can do capital invested equals profit divided by ROI. So let's start with the first one. When would you solve for ROI? Well, it's the first step to getting an annualized ROI. And once you have annualized ROI, then you can compare one investment to another investment. So if you made a $25 profit, you had $100 of capital invested, your ROI is 25%. When you're solving for profit, it's because you're trying to budget your money. You say, well, I could make let's say I had $100 and I could invest it in something that would pay me 25% per year, then my profit would be $25. If you wanted more profit, then you would have to pick either more money invested or you'd have to find a vehicle that gave you a higher return on investment. Also, sometimes you see a very high ROI, but the profit is very low, and it's because the amount of capital invested is low. If you were going to spend a lot of time looking at a deal and putting things together, and you invest $100 times 25% ROI, you only make a $25 profit. The ROI is great, but the gross profit isn't good enough to justify all of the effort. Also can help you understand how to divide funds between partners. If someone invested a certain amount of capital and another person invested a different amount of capital, you could multiply the ROI times the capital invested to figure out how much capital each partner would take away from the deal. Here it is restated as a case study, and let's move on. So when would you solve for capital invested? Capital invested equals profit divided by ROI. It's trying to decide need-based reverse engineering. Let's say I had an opportunity where I could make a 25% ROI, and I knew that I needed, let's say I needed $25 a year to live on. You would just do the math backwards to figure out how much capital you have to invest. And here's the math here. So in this particular case, if your need was $25, you'd have to invest $100. If your need went up, let's say you needed $25,000, then your capital investment would be $100,000. Also, this has been the Hassle-Free Cash Flow Minute. My name is David Campbell. You can find more great information and investment opportunities at hasslefreecashflowinvesting.com. Thank you for your time.